All right. Let's get the microphone check out of the way here. Let me know if you can hear me across the various chats, including the public streams going on YouTube and Twitch. And I would ask, if you are over in Twitch and you'd like to chat, that you come on over to YouTube, as the plugin for Twitch is not currently working. You can find me at Landy's Crypto Corner on YouTube. There's also a link there in the Twitch profile if you want to head over to YouTube and chat there. Excellent. So we are going to get started here shortly. Just setting up a few things here on the back end. I see that there's more people joining into the YouTube live stream here. If you would like to chat in YouTube, I do have subscriber only mode turned on. That's just to stop the bots from coming in here and shilling random accounts, including all the promo SM stuff, which I didn't realize until recently that they were spamming the live chats with that stuff. So as I am the only one moderating this, it is on subscriber mode only. If you would like to, if you are subscribing to me over on Twitch, as I can see a few of you have done today, I would suggest that you come on over to the YouTube channel there at Landy's Crypto Corner and join us in the live chat. We're going to get started in just about 2 minutes here, and we're going to take a look at Bitcoin, Dixie, gold, and traditional markets. So give me just a moment here, and we'll get rolling. All right, let's get the music under control here, and we're going to get started in just about 30 seconds. Hello and welcome to Landy's Crypto Corner. Today is December 29th, 2023, and I'm your host, Landy. Welcome to our end of the year market analysis live stream. This will be the last live stream of 2023, and we're going to take a look, of course, as always, at Bitcoin to start. We will take a look at Dixie, gold, and traditional markets. I may take a few requests today as well. I know that some of you wanted me to look at some coins on Wednesday, but we just kind of ran out of time, as I was kind of making up time on Wednesday for missing a few live streams over the holidays here. So we're going to start off with Bitcoin today. As we can see, it has pulled back to our weekly zone here between that 41.8 and 43.2 level. Now, those are closing weeklies. Price oscillating or wicking in and around those areas is just fine. Now, if we do see Bitcoin close below this weekly and lower first standard deviation of the daily Bollinger Bands here, I would look somewhere around these prior lows by the lower second on a close. Now that's coming in at around 41.3 and to around 41K at the lower second standard deviation. That would also bring into play the wicks down to 40K. So if the wicks are lost at $40,000, the next big area to look for would be this downside weekly support area at $39,000 to that monthly there at 38,500. So if we do see price head that way, that would be a little bit of a structural change. But I do want to remind you to look at the weekly because we haven't even seen a high put in on the weekly. Now, I would caution on the weekly here, if we did see the upper first lost, we would be kind of looking towards some of those other supports to the downside. So the upper first standard deviation on the weekly is coming in at 39,630. If that area is lost on a weekly close specifically, then I would, of course, still be looking in this same general area around 39K to 38.5, but that would open up the possibility of Bitcoin swiping down to this 37.7 weekly, possibly even that 36.2. And you can see that there is the monthly down there at 35,000 to the weekly just below at 34,750. That is going to be available only if Bitcoin starts to close below the weekly upper first standard deviation because of where the basis band is. Now, the basis band is currently coming in at $33,000, as we mentioned on Wednesday. And of course, we will check this on the 1st of January to see where this updates to, as it is going to be closing on the 31st. And then we'll get an update on the 1st. So pretty bog standard stuff. Based on what we had already discussed on Wednesday. Bitcoin is just consolidating sideways as it stands right now. We'll go ahead over to our live stream chart that we typically use to mark up during the live streams. Now, of course, if you are familiar with this chart, or if you're not, rather, this is the Bitcoin in 60 seconds chart. Typically, you'll find this in my shorts videos here on YouTube and or on my pinned videos for x.com. And in this case, we already have our horizontal support and resistance levels. If Bitcoin does break out past this weekly up here at 43.2, man, 36.2, that was a while ago. This would be 43.2 and regain this upper first standard deviation around 43,630. I would be looking for 44K to get ran to around 44.5 by the highs. Above there, of course, the wick high at 45K to the monthly at 45.5. If we did see a breakout above that monthly, I would start to tag, or I would start to look at the next monthly above to get tagged, rather, at 47,000 to the monthly swing high up there at 48,240. Pretty bog standard stuff for support and resistance. Now, I would caution here on the daily that if Bitcoin does start to drop the 21 EMA, of course, that is below the Bollinger Band basis, then I would, of course, be looking right to those lows that I talked about around $40,000, as we do see the 50 simple moving averages coming into that area around 40,300. So it is above this prior wick low that's coming in at 40,150. If that area is lost, I would start to look for at least some short-term support around that $40,000 even, where the 55 EMA is coming in. Below there, then we're looking to support and resistance there at 39 to the monthly at 38,500. If we do see the 21 EMA closed above, and specifically the 9 EMA closed above, then I would be looking for the highs to get ran and possibly higher. Now, the 21 is coming in at that 42,466 to 42.5 as price kind of oscillates. And the 9 EMA is right there at the basis band on the daily, around that 42,850 to 42,800 area. So this is, the setup is pretty clear. If the 9 starts to cross below the 21, what we would be looking for is, a move somewhere to the 50 and 55 EMA. So that being the 50 SMA and 55 EMA. So this is, a little bit of dicey territory for Bitcoin, but it's nothing too crazy. If we look back on the daily here and see that the last time we saw this happen, where the 50 and 55 were kind of dropped, we can see that the 9 gets below the 21. Bitcoin comes down to the 50 SMA and 55 EMA, and then pops up for a little bit of a lower high. Then the downtrend, even the downtrend. Today's just going to be a rough day for speaking. My apologies. A little bit too much coffee today. But the downtrend kind of picked up and ran price right into the 200 EMA. We saw a nice bounce off of that, and then subsequently a nice move down below both the 200 EMA and this purple 200 SMA. A little bit of consolidation, compression on the Bollinger Bands, and then a nice upside move. Of course, this was our 26,500 low. We were calling for that one on the weekly at the time. Got this nice move up. We're pretty far away from the 200s, but you can see that they are coming into an area of interest on the weekly. Now, this is the daily, but if we did see, a move to the 50 and 55, that support area around the $40,000, maybe to the weekly at 39, and below to the monthly at 38,500. And if that area is lost, we are looking down to the next support, horizontal support resistance, where there is a monthly at around 35K, not marked on this chart, but on our horizontal support and resistance chart that we were just looking at. We do see that the daily EMA 200 or 200 EMA, if you like, will be likely coming into that area. We can see that the 200 SMA is quite a bit of a ways away, but it's currently sitting at the breakout point. So this was the highs over here at that 31.8, that ever important horizontal support and resistance area that we were calling for, pretty massive upside that we then saw should this area be tagged and broken above, and that was the 31.8 weeklies over here. We saw this originally tagged way back here in July, and then the next time that it paused at the weeklies, took a few days to consolidate just below the weekly overhead resistance there at 30,300 to 600, and then just green candle right up through that 31.8 to 32.4 daily, right into the monthly at $35,000. And then once the monthly was regained after a little bit of consolidation, back tested, and then off to the races to the next monthly level at 38,500, and then nearly up to that 45.5 monthly support resistance area. Now, in this case, this 200 SMA on the daily being above that prior zone, where we do have, two major highs in succession there, is a good thing. That's what you want to see. That would be pretty bullish on pullbacks then to that area for a retest. And, we have been cautiously looking for a retest in and around the weekly levels there at 30,300 to 600 to the breakout area at 31.8. But in this case, it is very far away from that, and a lot can happen. This is purely a consolidation as it stands right now. And I would expect some bouncy price action should things head down to the 50 and 55 moving averages there, so the SMA and the EMA. And mainly because if we start to see Bitcoin closing below the lower second and third, standard deviations on the daily for the Bollinger Bands, we would see expansion, but expansion right into support. So unless we get expansion past that support, then we start looking for further downside. But otherwise, we're looking for, a move to the upside off of those levels, typically in a bouncy fashion. Then we come back to it later. So right now, you're going to get a bunch of pattern traders drawing triangles and pennants and all kinds of stuff. None of that matters. Just pay attention to support and resistance. Horizontal support and resistance is going to be king. And your volatility momentum metrics are going to be king as well, in conjunction with, of course, trend. As it stands right now, we are in a trendless phase on the daily. It is going to start looking a little bit more like a consolidation here. If you are using the Landy bands, go ahead and click on the actual either the bands or the moving average, depending on what you have on. You can go over to style and you can use the trend checker here, and you can turn that on, and you can see that we have the green diamonds all across the tops of the candles, indicating that this is still a sustained uptrend. Now, what this is reading is the 9 over the 21, and are the 9 and 21 also over the 200 EMA? So as long as we see the 9 over the 21, this will print green candles. If we do start to see the 9 under the 21, you will see the green diamonds go away, indicating that we are in a period of consolidation. And then we are looking for either trend to break down below and start a downtrend below the 200 EMA, or we're looking for consolidation above and for the green diamonds to resume, that being the 9 getting back over the 21 and the 21 and 9 remaining above the 200. If we were to see this the other way, we would be looking for something like this. So this would be your uptrend, sustained, nice sideways price action, nice move up, stayed up here for a little while, quite a long while. And then we saw the 9 get under the 21, goes into a little bit of a consolidation, so trendless in this case. Now, yes, if you're looking at closes and swings, we were in a downtrend back here. But from an EMA perspective and a volatility perspective, it was remaining a bit trendless. We did get expansion down below the 200 EMA. We saw the 9 and the 21 subsequently break down below there, as denoted by the yellow label down. And then we saw a bit of a downtrend resume to swing the lows. It started to regain itself, went trendless, started to go and print trend again back to the downside from an EMA perspective. Don't confuse this with closing trend or swing trend in this case. We did start to see that once the 200 EMA was regained, the 9 above the 21 here, we saw the green diamonds print. We saw the yellow label up, indicating that price was starting to close back above the daily 200. And then it dipped down below, but the 9 remained above the 21, giving us the bias that this last low was likely to get picked up. It was also sitting right there on the 50 SMA for the daily. And then boom, up through the 200s and off to the races it went. So this is just a trend checker, a bias checker, a bias breaker, if you will. This is not yet entering what I would consider a consolidation to possible trend shift in the major timeframes. As noted on the weekly here, the weekly is still not even painted a high here just yet. You can also see that on the weekly, the lower standard deviations, which is denoted by these levels over here, these are the daily Bollinger Band standard deviations. So the basis for the daily, lower second and third, lower first, second, and third rather, and then upper first, second, and third. We can see that this is representing volatility levels on the daily. And in this case, we see that the lower second and third are still above that 9 EMA on the weekly. If Bitcoin just continues to go sideways through the weekend at close like this, then I would expect the 9 EMA to be somewhere in these lower bands for the Bollinger Bands here in terms of volatility levels. Also giving us the bias that things could come down to this 39,500 to weekly at $39,000. Maybe if this ticks up to 40, it just swings the lows at 40. And then, off the 9, we typically do see a bounce. Not a guarantee. If it is lost, then we're looking to the 21 EMA on the weekly. And that's around $35,000, which of course is a monthly level. So that is a monthly swing low. I would expect a decent reaction out of that level. I know that there's a lot of speculation that, ETF gets approved and prices drop and pullbacks to $30,000. Yes, those are logical areas to look, but you got to take it level by level if you're trading this on the daily, or if you're even trading over a portion of time where you're in a swing trade. And coming into the end of the year, things do get a little volatile in the lower term timeframes, as we have seen even today in some of the lower term timeframes. We've got you go down to the 15-minute, and we basically had a consolidation, a move back to test the upside of the weekly, and then down to test the downside of the weekly. Now, this is not a current weekly, as we have not seen a swing close, open, we have seen a swing high at 45,000, but we have not seen a close open that has put in a high. So in this case, I do not have any of the current trend weeklies up here. This is historical trend, this 43.2 and the 41.8. But in this case, you probably can go over here to the weekly and you can see that, this is just an inside bar. We have quite a few inside bars. So if we take a little bit of a closer look here, we can just kind of take the inside bars because we have 3 weekly inside bars as it stands right now. And we can take the high to low here and just fib it from the candle that these are trading within. And when doing so, we'll go ahead and turn off a few of our indicators here just so that we can look at the fib for the inside bar specifically. And we can see that the open of this weekly is right on the 618, and we had a pull back down to swing the 382. And so far, things have been closing between, since this candle back here in early December, the first week of December, we've had closes that have remained between the 272 and the 786. So this is something that is something to pay attention to here. There's many different ways to pull fibs. In this case, I'm being very specific about pulling just the wick high to wick low, which this wasn't really a wick low. There's barely a wick or shadow on this candle from early December. But in this case, what we are looking at is just fibs for the inside bar. So if we go down the time frames here, you can see how price action has reacted to the inside bar range. And this does give me a bit of a bias that, of course, back above $43,000, well, if we line this up with Bollinger Bands especially, so we can go back here, we can turn off the trend checker and again, this is just an EMA and MA trend checker. In this case, it's an EMA trend checker for moving averages, not swing highs and swing lows, not closing swing, not closes either for highs and lows. In that case, it's just trend checking the EMAs. Now, when looking at the Bollinger Bands, if we look at and we can see that the 618 at $43,000 would put, if Bitcoin starts to trade back above there, would put it above the basis band, giving us the bias that things are going to test the upper first around that 786 again, which is in the deeper 43,000, almost $44,000 level. If we were to look at, down below the 382 here, that is below the lower first, and we're looking back down to somewhere between that 272 and lower second standard deviation around the lows. And then below there, of course, the actual lows of this current move to that $39,900 to $40,000 area. Pretty cool to just get an idea of where things fall on the Fibonacci numbers for that weekly inside bar, as it is still just between the upper first and upper second of the weekly. So, again, there's a lot of dooming going on right now, and I'm not really sure why. When we have a giant up move on the weekly, we do not yet have a weekly high. That doesn't mean that one can't paint, coming into the end of this week, end of the year, early in January. That's fine. Then we start looking for pullback areas of interest. But this is an uptrend on the weekly, and I see people immediately looking at this and going, well, the next area to the downside is obviously going to be, to go and swing the actual lows down here. And, while a massive drawdown is not out of the question ever, it is not something that you look for first. I mean, trend is king. So it's trend, support, and resistance second. Volatility third, creates momentum. And those are your 4 key pillars to trading in general. And in this case, we have a nice uptrend. We had an uptrend off of the lows here. We had a higher low. We had a lower high to higher low to higher high to higher low to higher high, higher low. We had a slightly higher high. We had a little bit of a closing lower low, just ever so slightly. You can call this equal lows. Trend remained intact. A little bit of a swing high. This was not a closing high put in on the weekly. And then a nice higher low structure here, 2 new highs. So what's the next thing to look for? A lower low? No, most likely you look for a higher low, and then you look for a trend shift around a lower high in that case after. And as long as, Bitcoin is closing weeklies above 26,500 as it stands right now, because this is the most recent higher low on a swing and on a close. It's in higher low territory. So, and the first thing that I'd be looking for is not to go down and make a lower low below 26,500. So I do want to make that pretty clear. I'm seeing a lot of people really, I don't know if it's just for, views and clout. I don't really care about that. I'm here to help navigate you through some of these markets and teach you how volatility fits into all of the normal trading stuff that you hear about from all the gurus, because they're all missing one key component, and that is volatility. And, eventually we are going to start talking options markets and how that is going to, the open interest on options markets is just going to really change the way that Bitcoin operates. But in this case, first things first, we would look to, the upper first and the upper second here on the weekly as a zone that's bracketing price. So basically 39,600 to the upside here at around 46,000. And, wicks below, wicks above, fair game. And in this case, wicks above the upper second, and I'd be looking at, $37,000 at the monthly. Wicks below the 39,600, and I'm looking to the weekly at 39K to the 38,500 monthly. So, this is something to pay attention to coming into the weekend here. The momentum pivot at 43,800. It is pressure down. We do see that volatility is down below the moving average with a negative slope. Now, that does mean, in my opinion, as I've said before, that if we do see an upside move, that's the only way you're going to see volatility increase from here, unless Bitcoin breaks down below the basis and starts heading towards that lower first aggressively and probably even below it. That's the only way that you're going to see volatility move back up. In this case, if we do see volatility spike back up and remain, and the moving average remains to the downside, that means that Bitcoin is heading towards the upper second and likely swinging some of those areas that we've talked about to the upside. I would still exercise caution because those are major areas of resistance overhead. And until we saw the moving average move back up with volatility, would I feel comfortable calling for more upside from there. Now, that doesn't mean that things will just go to a specific level like 47 or 48,240 at the swing high on the monthly, weekly area and just immediately dive down. It's simply from a volatility standpoint, what we'd be looking for is any kind of volatility increase from here is, while the moving average is heading down, is likely to get sold into. That doesn't tell you where it's going to go. You just take it level by level. It could head up to, 50 to 55, $56,000. It could even head up to 60, but it's telling you that, it's likely that this move is going to be in for some consolidation after that, or mean reversion after that last spike. And I'll be honest, my bias is that we get another spike to the upside. That does not mean it's going to happen. Everything still needs to meet the criteria that we talked about, and we'll talk about again in Bitcoin in 60 seconds over the weekend. Heading into the close, I will have a Bitcoin in 60 seconds video just to kind of update you guys coming into the end of the year. But, unless I see, this weekly regained at 43.2, and then, the upper first and upper second regained around 44.5, take out the high at 45K, I'm not really looking for further up. I'm just looking for the highs to get ran. Above there, that's where it's game on to go test the monthly at 45.5, 47,000 at the next one, and then 48,240 and beyond for the subsequent monthlies after that. I am still biased as long as Bitcoin is in and around these weeklies at 41.8 to 43.2 and closing candles here consistently, especially on the weekly time frame. I am biased for this to continue heading up over time. Now, that doesn't mean it's going to. Of course, if we see these weeklies, especially on a weekly close, get closed below, that's where the next weekly at 39 to the monthly at 38.5 and below to those downside support areas is in play. Now, we can get a bit of a bias on the pullback areas that have confluence here on the weekly. So we pulled an inside fib, right? We can now pull another fib for this particular move. So we can take this fib one of two ways. You could take it from the most recent high or low, which is coming in at 26.5, because that would be your trend breaker to the downside. Or you can pull the consolidation if you like, because it was a fairly big consolidation. You could pull the wick low. Either way is going to be valid. We're going to come up with areas of interest. Now, if you pull the consolidation, so we had, this clear area of resistance at $31,000 on a close on the weekly here. So when looking at this, this is a significant area, and that is right at a 382. If you're to pull the current high at 45 down to that consolidation low, which is coming in around the 24,750 area on spot, you can see that a 382 is just an inverted 618 if you want to pull it the other way, right? So in this case, this is what you would consider a bearish retracement. Bullish would be 0 at the top. As you break the 0, you're headed the other way. In this case, we're looking for the fib extension here, but we're also looking for major areas of pullback that line up with support and resistance. And I want to call out this one from the consolidation low. So the highs to the consolidation low. Look at where the weekly basis band is. It's right at the 0.5 fib, or the 50% Fibonacci level, at 33,300 to 400. The 618 is above that monthly at $35,000. Recall, there is a monthly close open structure at $35,000. So there is a nice big zone of support there from a fib perspective, from a horizontal support and resistance perspective, from an EMA and MA perspective. So we have a ton of confluence for that area. I know that if things do start heading down, which again, it's not even a guarantee that things pull back from here, but if they do start breaking through the levels to the downside and start getting to this zone, it's going to be eyes on this zone, because a lot of people are going to be calling for the 30,000 to 30,500 weeklies over here. They want those close opens. They want the even numbers. Maybe there would still be a spike down there, but realistically, we have a major zone of interest that's coming in before that, and Bitcoin may not get there if we were to see that kind of price action play out. Doesn't mean that it has to stop at these levels, but it's going to be one of the bigger areas that I'm going to be focused on. Should we start to see specifically, the local area close down, the close down below rather, and the upper first lost on the weekly. That's really what I'm going to start looking for, as the basis band will start to update, at the close of this weekly, and head into somewhere either between the 50% fib and the 618, or somewhere around that 618 as well. So we would have much more confluence there as well. I'll be honest, this is dead simple stuff to be pretty straight with you here. Now, if you were to pull from the most recent high or low, you can see that the 618 is falling into that 36,700 area. Now, there is that 37 to 37.7 weekly, or 36.2 to 37.7 weekly area. That's kind of where the 618 is coming in there. Not the cleanest, fib pullback area. The 50% coming in at around that 34,500. So somewhere around that monthly at 35,000 to that weekly at 34,750. Yes, it's not marked on this chart, but we have these things memorized by heart. Now, this is where we're not getting clean price action lining up with those horizontal support and resistances. That's where, in this case, instead of pulling from the higher low of this particular move, pull from the consolidation, and you're going to find all the confluences lining up. All right. The next big thing to look at then is the fib extension. So on the weekly, if we're looking at this particular move off of the consolidation to the most recent high, the 1272 is coming in at just shy of $53,000. The 1414 is coming in at 57,600. The 1618 is, funny enough, coming in right across the wick high of the first high of 2021, the all-time high, prior to being broken there in late 2021. And that is coming in right at 65,113. So literally cutting across that high. The next big area to the upside there is the 1786 to 1888. And then that's where you're looking at around 72,000 to 76,000. The two spots coming in there at 80,000 and beyond. Not really relevant for right now, but I did want to show that this particular move's fibs line up with that nice 618 crossing right across the highs here. If we were to take a little bit of a deeper look at the full structure on the weekly of the uptrend here, you can see that major areas of interest back to the downside are going to be that 618 at $30,000. Now, again, we just talked about this. It's not the first place that I'd be looking for as a major area. A lot of people will be calling for that area to get ran. Doesn't necessarily mean that it will. Below there, go figure, the 50% fib of this move up falls right there at that higher low around 26,500. It's actually a little bit lower, to be fair, at 26,400. But more importantly, from high to low, fib extensions. The 1272 cutting across the highs here, in particular, the all-time high on a close at 60,175. That was the first all-time high in April of 2021. And the next area of interest, the 1414 fib, coming in, cutting just above the all-time high at $69,000 there. So we're getting a lot of confluences on even the current move. The next big area, and the reason why I'm going through the fibs with you guys is because I promised you guys I would, as it was requested last week, and we did not end up getting to it. Now we can also take a look at the all-time high to the current low side structure, and we can see that Bitcoin is trading above the 618, and the 618 is coming in at roughly $39,000. So big area. What is this? Where's the 786 falling in line? $50,000. This is actually, I believe, 50,000 to 52,000. I believe is a Fiboswani fib level, and I don't think he's getting there from this particular retracement. So in this case, you could pull this either way: 0 at the top and 1 at the bottom, or 1 at the top and high to low in this case, and 0 at the bottom. But in this case, we're looking for breakouts above there to head to around $58,000 to $60,000, and then of course to the all-time high. Pullbacks down to the 50% fib here, not out of the question. There's that nice weekly wick low in there at 32,600. Below there, then we're still looking a little bit above that prior higher low and the consolidation here at the 382 at 27,400 or so, kind of right in that range. The $27,000 area is a monthly level, so we have a monthly close open at 27,200 down here. I can show you that on this monthly chart right here. So we have this close open structure just underneath there, right here. That's this guy with this order block on a close. Now, this was a swing high. It didn't really close below until down here, so it's kind of an intermediate level there. Not as powerful as if it was a close open high to low. In this case, the actual high right there is at 30,446 on the monthly, as this did paint a 3-candle high. Did not close below the wick of that first candle that painted, though. That was at 24,750. Very nice. Boom, down, head back up. Look, there's a million different ways you could pull fibs. We could pull fibs from the bear market lows as well. This is worth showing. So from the higher low on a swing to the swing high, all-time high, you can see that Bitcoin's low came in right on the 50% fib. This was actually something that we were tracking as a group well before I even started publicly live streaming. We were still doing live streams, but they were just me and my group of friends here. And now there's about 530 or more of you that have joined us. But we were calling for this 50% fib from this area, as it had confluence with well, we were looking between $15,000 and $16,000, but it was the higher low structure here. There was another confluence, but I will get to a lot of this stuff as we come into next year. If you were just to pull the bear market low, swing low to the swing high, I don't really like that because we had a downtrend here on the monthly. So that was why I take the downtrend here. We had the high put in here to a higher low, and that same high on a close open that was formed on the close open also formed the higher low. That's far more important in my opinion than pulling from the bear market bottom. That gave us a nice clean view. We can also see that there was areas of interest even at the time when we were trading at the highs that we were looking for, like, hey, if it doesn't break out above this area, we're looking for somewhere around the 786. Possible rejections when the 888 confluence was brought to my attention, which to be fair was fairly recent. Thank you again, Torque or Roca. Both of them brought that up. And, so this is going to be something that we'll talk a little bit more about, but there's some really interesting stuff. So in particular from the higher low off the lows here, there was the 2-spot extension kind of catching all the price action there. It's from the first high to this guy here, there's not too much in terms of confluence. Things could have dropped down to the 14.5 if you were going to take that, but this was the far more accurate one on a closing basis. So we'll do some more fibs coming into the end of the year. I have some interesting stuff I'm compiling for you. I don't want to give too much away there before the end of the year, and when we start getting into looking at the new quarterly. Again, I want to remind you to pay attention to the monthly upper second standard deviation at 39,600. Oh, hey, that number again. So, we're seeing this come up quite a bit here. 39,600 has confluence with a lot of local price action, support and resistance, Bollinger Band levels, and EMAs and MAs. So 39,650 in this case is the upper second standard deviation of the monthly. Bulls, you want to see this closed above. If it does not get closed above, that's not a death sentence. It doesn't mean things are going to crash out to the lower first or swing the lows. Although those things are all possibilities, you want to see this for expansion kickoff. And we already have expansion of price action through BBWP. So from the Bollinger Band to the upper second, we have seen price expansion, but you want to see a closure above the upper second for follow through and confirmation of aggressive expansion on the monthly. So that's going to be the big one. $38,000 is the momentum pivot that's likely to update, just to revisit that. You also want to see the upper first standard deviation on the quarterly closed above, and that's at 40,800. So, Bitcoin flirting with that area fairly recently, now trading around $42,000. When I say fairly recently, it's, the back half of December here. It has flirted with that area. And, wouldn't be out of the question to see it head down. If it does head down there, keep a close eye on it coming into the quarterly close and monthly close. So in particular, 40,800 is the big number there. Close above the upper first on the quarterly. And then we've got that 39,650 at the upper second on the monthly. Now, don't forget about the 2-month either. This is something to pay attention to. This still keeps the possibilities open for a run to that upper first, which is at $47,000. That is the monthly overhead. That is, of course, above the monthly that was front run at 45.5, which is a monthly close open structure. The way that the 2-month looks, well, quite honestly, it looks as though things are going to head up there. That doesn't mean that it's destined to happen in the next 2-month candle, although I do think it's a very high likelihood as long as Bitcoin is closing 2-month candles above that basis band, which is coming in at $34,000 in this case. Now we do see this is not yet even close to an expansion. Excuse me. But we do see the 2-month momentum is pointed to the upside. Momentum pivots at 23,800. Again, that's in contrast with the $38,000 monthly here. Monthly has not begun to really get aggressive expansion. That's where we want to see the upper second standard deviation getting closed above on the monthly. And then the 2-month, this is going into a compression phase. This, to me, along with the quarterly and something that I'll get into probably quite a bit deeper after we see the quarterly open and the yearly open and the 6-month open and so on and so forth, is where is the expansion levels? Because there's somebody that I follow and that follows me, very big account on X, that is Credible Crypto. He has a theory that 2025 is the top's going to come in. I also kind of share that perspective as well, that some point in 2025, not at the beginning of 2025 necessarily, we get, as I explained on Wednesday, typically 4 to 7 green quarterlies. Like green monthlies. Is it green monthlies or green quarterlies? I believe it was green quarterlies. We get 4 to 7. And just to kind of revisit this, yes. So we get 4 to 7 after after a Stoke turn and expansion on the quarterly. Now, you can take a look at the 2-month there and really start to get a bias for when that expansion is going to begin. We got to see the monthly expand, we got to see the 2-month expand, and then you start to see that reflected in the quarterlies. So the 2-month is, in my opinion, going to be the one to watch. Mainly because we see that for momentum on the monthly, it is getting up into the overbought zone. Although I want to remind you, if you are, or let you know if you're new here, when you see Stoke, this is a regular Stoke, not a Stoke RSI. So this is reading close over close price action. And when you see it headed into either the overbought or oversold zones, that is typically where the biggest moves occur. And this is, fairly obvious when looking at a close on or around an upper second standard deviation of Bollinger Bands, because you're kicking off expansion right at the extreme end of a monthly, in this case, overbought Stoke. And it's only just now getting to that zone. That is bullish. Many people want to take the counter trade to that, but we're looking at a monthly time frame, and it can hang out in that zone for an extended period of time. So I do want to remind you of that if you have been here a while. And if you have not, that is typically how a regular Stoke works. The other thing to point out here is that we could even see a Stoke shift on the monthly, but the 2-month is currently pointed up. Momentum pivot is all the way there at 23.8. Typically, that's where you see bullish resets of the lower term time frame, stochastic momentum, oscillators. And in this case, it would only just be getting rolling. If we start to see this closing above the upper first, you're going to see the etchings of expansion. That 29 will start to tick back up. So we can see the BBWP is headed down fairly aggressively. I can tell you that this is going to close and head down some more, most likely here. We'll see if it flattens out or maybe heads back up coming into the close open, but it is still headed down, which means that we probably have at least the first quarter of next year before this even starts to get above the moving average. So 2-month closures, first quarter to go kind of thing. And then we come back to it. That is what I'm going to be looking for, and I will explain more when we come into the first of the year live stream on Monday. But this is going to be very important to watch because, I do think that this is going to tell the story of length of the bull market and that things are only just now beginning. We can see that the last time we had a Stoke turn on the 2-month, it turned and we saw a big up candle to the upper second standard deviation here, right? So we see the Stoke turn came after this big up candle that wicked into the upper second standard deviation. And then we still saw a cool down in BBWP. Stoke was turned to the upside and remained up throughout this compression on the 2-month time frame of the Bollinger Bands, further giving us the bias that things were going to get picked up into higher low fashion and solidify that 2018 bear market low as a macro low, because up until that point, it was just a major low. In this case, we're seeing aggressive upside on the Bollinger Bands, or compression of the lower Bollinger Bands into the upper Bollinger Bands here. We can see that 20,800 is that lower first. Even last time, this looks small, but this was pretty far away. It was a couple grand away, even with Bitcoin trading at, around $3,000 to $6,000 at the time. This was still at the time down below the closing lows on the 2-month. I'm not necessarily looking for something like that, especially with the prospect of Bitcoin ETFs. Granted, I'm going to get into more of this, but they are cash creates as it stands right now. I explained a little bit of this, but I am going to be explaining a lot more as they get rolling and launched. It doesn't really matter when they get launched. If they get launched sometime next year, I expect things to not enter what many claimed was black swan territory. Let me just go and check on that black swan bias. Oh, it was a weekly downtrend, and yet it was somehow a black swan. No, it wasn't. We could tell what was going on at the time, just like we will know well ahead of time for this one. Everybody's looking for a black swan like 2019 into 2020. And until we get a weekly downtrend, there is no point. It would just be a massive down candle in the context of a wider uptrend, and not until it broke down below a higher low, creating a lower low and then a lower high, would we be looking for that, quote unquote, all the black swanners to come out. Quite honestly, I would love to see a massive down candle right into those weeklies at that $30,000 level like everybody's looking for, because then that would get everybody, oh, look, black swan, ETF, sell the news, blah, 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 right? All this other crap. I would love to see that, because it's a perfect opportunity, because right from where Bitcoin is trading now, that would be still a beautiful uptrend. Whereas back in 2019, we had swing lows being consolidated around, and then a breakdown to a lower low, and then a lower high. When this lower high painted, we knew that these lows were in play to the lower lows, which came in around these this support structure over here. This was caution. If this did not get broken out above, specifically closing above the wick high or swing high, we were looking for this area to be fair game and below, and it got below. It wicked down into this area, hit the top side of the bear market consolidation. The same kind of thing is what I'd be looking for here. Another higher low, and then, a consolidation or a swing of the highs, and then take out that higher low wherever the last higher low is. And then you look for lower highs and trying to begin downwards. And then we can start looking at the structural supports, right? And maybe we could look back to something like what everyone would call a black swan tag of those top side of the bear market lows. And this is a macro low now. I want to remind you that a major low was put in down here at that 14 or 15 and a half here on spot. We had a consolidation high to a higher low. Once you get another major low like this, that solidifies the low before it as a macro low. So we have a macro low and a major low right here. So in my opinion, the lows are in and shall not be violated unless, something crazy happens, like an actual black swan event, not something that you can't, something that literally is a candle down below the macro low, and not a downtrend below the macro low, because that's not a black swan at all. So I'm going to stop there with Bitcoin. I am going to read through chats a little bit here. Bobby says fibs are fake. Oh, yeah. I know what you're referring to. Those people are funny. Hi, hello, Ivan, No Name, Bobby, Don, Cheryl. For those that are just chatting, I see quite a few of you in here that are watching the stream but not chatting. If you want to chat, come on into the chat here and give me a piece of your mind. I'm not sure what you mean by 25 or 24, Don. You'll have to elaborate on what you're talking about. 25 or 24 for the all-time high. Well, that might be what he's talking about. Yeah. So somebody just chimed in over on the chats that for people who are not in the public streams, mentioned like maybe he's talking about the all-time high time frame. Yeah, what's going to determine that is, look, expansion. If expansion happens late 2024 or mid 2024, we're looking at the high being, mid to late 2025, maybe even pushing right into 2026. So, yeah, okay. It says Credible is expecting an early all-time high. I mean, it's not really, because he's saying 2025 and then followed by a bear market. He's not specifying when in 2025. I do suspect he's probably looking into the latter half, mid to late 2025. If he's not, you know, uh, he's not going to necessarily be right or wrong. I mean, it's just an idea that he's floating out there of what he's looking for. He's going to be either validated or invalidated. I don't think he's like dead set on it. But yeah, I would be more looking towards the monthly, 2-month, and quarterly volatility metrics. Again, 4 to 7 plus or minus 1, meaning it could be as short as 3 to 7, possibly 8, which would from here give us 2 years, would put us right at 2026 is what I'd be looking for based on the quarterly stuff. But we're going to get into that a lot more coming into next year. Yeah. Hi, Sam. Yeah, go ahead and throw likes on the videos, on the video on YouTube there if you are on YouTube. It does help out. So yeah, yes, Don, I agree. Look, I am not a cycle theory guy in terms of the 4-year halving cycle. Yes, it has a major impact on price, but in terms of price cycles, I do believe that Bitcoin is in a lengthening cycle, and it's going to continue lengthening. And this is where, one of the things that kind of supported this, and I was mentioning this to people who were trading with me and in various groups that I've been in, whether it was a group that I ran or a group with my friends or a group that I had joined. Back here in 2018 into 2019, I had mentioned, like, I do think that this is a massive consolidation. We are going to move up, but not in a parabolic fashion, and go into another massive consolidation. Look, I really do think this was supported even at the time with, if you look at something like the quarterly, when you have massive volatility, you're going to typically get this in something that is racing up from its inception when it's being charted. But this slowing and, less aggressive volatility spikes with a more aggressive downside consolidation look over time. And it will take a long, long time, but eventually you'll see like full cool down, which just doesn't mean that things aren't going up. It just means that these moves are taking longer to break the quarterly highs. Now, yes, they are around the same length currently, but in terms of the aggressiveness of the moves and the look on the macro, you could even go out to the 6-month. We're looking at these things. We have what many are saying, well, this is just shortened, and this was shortened. It's not. What ends up happening, and we could go through and measure this, but in my opinion, you can do your own research. From the candle high, the then all-time high in 2017, to what we are seeing now, in my opinion, is a massive macro consolidation that will keep going sideways and up. But from the 6-month time frame, I do believe that over time this is going to eventually end with an explosion to the upside, not downside, like many believe. Now, yes, there will be massive moves up and massive drawdowns, especially as the number goes up. But I'm not looking for this to. I'm not looking at this as this is going to be the blow off top. Me personally, I'm not looking for this as this is going to be the blow off top to 5-6 year bear market. I know that is the thesis that some have. I have to evaluate that when the time comes, right? It's not something that I'm currently looking at. Could Mr. Credible be correct on that? Absolutely. He could absolutely have his idea validated. But me, from a volatility standpoint, I'm not looking for that just yet. And I would actually be expecting, and I'll give you a little preview. We're on the index here. So we have the 6-month chart up. We're only now just getting Bollinger Bands, right? On the 6-month chart. I want you to note where the 6-month upper second standard deviation is. It's currently at $43,000. So I don't want to get too much into this, but we have not seen a volatility spike up over the moving average, but we will have a chance to see that, especially if Bitcoin starts closing above the upper second standard deviation of the Bollinger Bands on the 6-month time frame, as they have been populated since January of 2019. Yes, it is a newer metric. Yes, it is a little bit different, but what I really want to impress upon you is when volatility is expanding on very long-term time frames, of course, it would also be expanding on the quarterly. We would also start to see this come out of compression on the 2-month, which it's gearing up for. It's already heading away from the basis band. So we're going to see that volatility uptick. It's just a matter of when does the volatility metric catch up, get over the moving average, and confirm. We've probably got, on average, we've had 1, 2, 3, 4, 5. That's 10 months because it is a 2-month time frame. So that's 10 months. For the last volatility expansion, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we had 20 months of volatility expansion on the last big one. Now, I want you to note when this happened. This happened from March 16 to the peak, and it didn't even get under the volatility. It didn't even get under until January of 18. So you literally had 20 months of volatility expansion. That is something that would line up with the latter the late stages of 2025. But we would still have the quarterly ready to go, and the 6-month might be ready to get volatility expansion. That's something that we have not ever seen. We have seen volatility expansion on the lower term timeframes, but not a 6-month time frame. That doesn't mean that it doesn't just pin out there either, and $43,000 is the high, because the upper second standard deviation is either going to be one of two things. It's either going to be a reversal area or a continuation area. In this case, it could reverse off of that area, and there we are back at the basis, 13,800, 12K. Man, all the capos of the world are right. The profit blues are right. Oh, man. The income sharks before he flipped bullish were right. No, I really don't see that happening. That's not what's being presented in front of us right now. But nothing is ever out of the question. It is not the first thing I'm looking for from here, though. But I've got some exciting stuff coming into next year to show you guys. And yes, it is a little iffy to be calling things on the 6-month, but we are getting to the point where we're going to see this close and another open come in on the 6-month, and Bitcoin as an asset is maturing, and it is worth paying attention to volatility on the 6-month. Now, it used to just be the quarterly, but as Bitcoin grows up and graduates out of its pull-ups into wearing tighty-whities, we got to pay attention to these longer term time frames, because this is where we can start really planning for the multi-year runs. And this might be a nice multi-year run, and we've already had a year. It even lasts into 2024. It's been a multi-year run from the lows, right? But in terms of getting out and breaking out above the highs, you can see that from its inception, it has typically 1, 2 6-month candles above the all-time high. We had above this high here, we had actually the swing high. Yeah, so 1, 2 swing high. We had 1, 2, 3. So we literally had we had we had 18 months above there. So 6 and 6 is 12, and 6 is 18, right? Just so that I make sure my dumb head is doing math correctly. Above the all-time high. Of course, it did come back and find support on that area, which is fairly new for Bitcoin, right? Which to me tells me that we are more in a very long-term consolidation than not. That's just, it's no longer racing. It's going into a longer form consolidation with an ever increasing range to the upside and downside. In terms of, excuse me, in terms of volatility, as hopefully I hit puberty again at the age of 40, I grew up to be a big boy. All right, that's enough Bitcoin for today. Let's go and look at Dixie and see how Dixie's holding up and or not. I actually haven't looked at it today. We're going to see where it's at. And it did regain the 101 region that we had been speaking about. Now, in this case, for Dixie, if it can put in a low as it stands right now, from where it is, it does have to close above this open at 101.54, preferably taking out the wick high and the lower first rather here at 101.53. What was the open there? The open is above there, so it's 101.54. Take out that lower first, set a low, and then take out this last low on a wick and close. So that would be 101.77 to the close at 101.94. So basically 102. Regain 102, and it's going to test 102.5, this last little high by the basis band here, which is coming in at a technical level of 101 or 102.59, 102.60. I would say above 102.50, and it's game on to test up a little bit further. We can see that there is this low over here in that area coinciding with this rejection where the basis band is now coming in. So 102.50 would be the area of interest to the upside. This is still expanding to the downside, so any closes below the wick lows that loses the lower second, I would be looking for a further move down. That's coming in at 147 cents. I'd be looking for things to eventually work their way down to $100. We're going to create a little bit of a zone of interest for me to follow up with next stream, and I'm going to get that in here. And that'll be to follow up with on Monday. Let's take a look at the weekly real quick here. Yeah, so it is down below the lower second. So if we do see a close today below this lower second standard deviation, the next thing to look for is, does Dixie regain it next week? So that's now coming in at 101.43. If it can regain that next week, it could potentially put in a low and then head back towards the upper first. That would be a higher low than this low over here. Yes, it is a swing downtrend. It is a lower low, lower high, even on a close, because we did have a 3-candle closing low along with the swing low being put in there to a swing high that immediately dumped down and dropped the wick and the close. So it is a downtrending structure. But if it did close open the weekly and regain the lower first around the 101.5 region, I would generally be looking for it to test up over time to the lower first, which is around, it's a little bit above the area that we just identified at 102.5, but if it were to get above that, the next big area would be 103 right here at the lower first. If it does continue down, we're looking for it to drop the actual low here at 178 cents on the wick or swing, and then head down somewhere around the $100 area, 99.95 in this case, to the wick lows down here at 99.58 and beyond. So a little bit of to the ground and beyond, said Buzz Lightyear. No, and obviously that's not what he said, but you understand what I'm saying here. Nuke it a little bit further down, basically. Looks like it could be setting up for a low, though. And momentum supports it. BBWP also supports it. This does not rule out a spike down back to the current lows, maybe a little bit lower as well, down into the $100 region, just so you understand. Volatility is turned, moving average is turned, but until it starts to regain some of these levels to the upside, specifically around 102.5, the door remains open as the basis band moves down and the lower standard deviations continue to move down for that $100 area. Now, until we see 101.5 and then subsequently 102.5 regained, then I would say that door begins, or that window begins to close. When looking at something like gold, which is what we're going to move on to next, well, we see that it did swing and close on higher highs ever so slightly, and in this case, it did swing the upper second standard deviation. We were looking at this to come up to somewhere around the the 2081 to $2,100 level. Did hit the 2081, which is a close open high area that we were already looking at. That was this wick high over here. And I have that all mapped out here. I don't think it's worth turning on. You could just reference the last stream if you want to check to make sure that I'm not lying to you that we called it. No, we called it. 2081 to 2100 is kind of where I was looking. That doesn't mean that it can't keep heading up further. If it does get above, 2100, next big area that we're looking for, as I continue to I hate the trading view. For so many years, the tools were in one specific area, and then now they're not. Above 2100, I'd look for the wick high at 2146, 2150. If it does drop the upper first here, I would look somewhere around the support resistance zone around 2040 to $50. Currently, it's at 2063. If it dropped that area, look into the basis somewhere around 2030 to the low here. If it does break down below the low at 2016, we're looking back to 2005 to 10. We're on the lower first, and then down to the lows again, just under $2,000 to 1990 to 1980 or so. As long as it's trading above this low down here at around this 1973, as long as it's above there, I think it's going to be sideways and up. If it does start to drop that area, then we're looking mid 2000 or mid 1900s to 1900 area over time. Weekly is saying above 2025 right now as it stands for this weekly, looking good. Higher low on the swing. Really big rejective swing high though, so I would exercise caution until for much deeper targets than 2150 to basically head to 2200, 2300, 2500 area. We got to see weekly expansion above the upper second standard deviation. Right now, it is like it's a volatile range between 2081 and the downside at 1810. I know people don't want to hear that, but it's increasing in volatility and expansion on the weekly, so you cannot discount the downside. Now, of course, when you're above the basis, which is coming at 1961, then you're biased to the upside, right? Especially trading above that upper first at $2,026. That is going to move up, likely to be somewhere around $2,050. So Above the upper second, I would look for very aggressive expansion. This is at 2,091 bucks, so basically 2,100, most likely at close today. So above there, then I'm looking for the highs at 2,150, possibly 2,200. To the downside, as long as 1973 is being closed above, I'm looking up and to the right and or in a consolidation. There could be a downtrend to that area, but as long as it stays above, generally speaking, I'm looking up and to the right. 2052 is the momentum pivot. That's going to update pretty aggressively today. You see volatility dropping. Not yet a moving average turn on the weekly. 2122 is going to be the momentum pivot on the weekly. Not really concerned about that. It's more about where that upper first is and basis is to the downside in relation to the expansion. Right now, it is showing signs that it might want to tire out, but it's never a guarantee until we see things actually confirm, and nothing is confirmed. So basically, sideways and up, as long as it's above 1973. We see a nice, grind up, riding that upper first on Dow. Looks great as long as it's closing above the upper first, which it tagged at 37,551. It has continued to make new highs, coming in around that 37,800. Next big area is 38K to 38.2 at the upper second. If it does drop the upper first, I again would be looking down to around 37.1 to the basis, which is now coming in at 36,950. Below there, we step it down to the lower first, which is coming in right around this high area. So I would say somewhere around 36.2 to 3, possibly 36.4 at the lower first standard deviation. And at worst, I do think that lower second would be the big one to watch out for. That's at 35,750. That would be a dump out, and you'd probably see a very aggressive move off of that area and then come back to it later, for possible lower highs, as that would be a downtrend, or that would be the beginning etchings of a downtrend with a trend break. Right now, this is an uptrend. Don't fade the trend until the end of the trend. And when the trend is unclear, everyone's in fear. And that's when you get to work, by the way, with Bollinger Bands for expansion and contraction. In this case, 37,500 is the momentum pivot. It is looking to close above there today. We'll see if that actually occurs, as it is trading at, around 100 points above. Weekly looks very good. If it can close this, man, if it closes above the upper second standard deviation, I will say two things. One, probably looking at continuation in the lower term timeframes below the weekly heading into the beginning of next year. Not a guarantee, but and we were likely to see this maybe grind out up against the upper second, continue to make new highs before coming back for some sort of a higher low structure try. If we do see things start closing back below the all-time high, then we look to that upper first. The all-time high, of course, is at 36,950, basically 37,000. Below there, we're looking to these close open right at the upper first here, rather at 36,260. Again, we just talked about this on the daily. Big area. I'd be looking for bounces in there, to be quite honest. But higher lows, higher lows are in play as long as it's closing anywhere above 32,330, right? This is not hard. It's more than likely going to put in a higher low. It's just a matter of when. This move is still ongoing, still getting expansion on the weekly. It's pushing the upper second standard deviation, indicating that it wants to get continuation into the first part of 2024. We're going to probably be looking at the same thing on NASDAQ, if I remember correctly. Yep. Now it has come down to test the all-time high here. And we did not hit our $17,000 call, our 17,000 point call, if you like. In this case, the open came in at 16,963.52, which, to be fair, is a significant miss thus far. But I would still be looking generally for 1,700 point or 17,000 points to get tagged. If it does close below the upper first and lose the all-time high at 16,764, keep an eye again at 16,550 or so to that basis band at 16,450. Below there, look into the lower first, somewhere around these highs, to be quite honest, at like 16,100 to 16,000 points. I would expect it probably to hang out, and then the availability for it to go and test that upper second there at 17 to 17.2, which is giving it a bit of a wide berth up there, but still very much in play here. And that the next big area would be 17,000 to 17,200 as it stands right now from the Bollinger Band look. When looking at the weekly, pushing right up against that upper second. This is telling me that this wants to get continuation into the first part of next year. Nice expansion of the Bollinger Bands, nice expansion of price volatility, nice higher low off the upper first. You know, if it does happen to close today above 16,917 or 16,920, I'd be looking for continuation into next week. And if it trades anywhere above 16,860 next week, if it doesn't do it today, I'd be looking for the current highs at just below 17,000 to 17,200 to get ran, possibly more. So that is my outlook on that. It is turning in terms of momentum right now. This is more than likely going to turn into a bullish reset. We're looking at the 2-week, 3-week, and so on and so forth momentum. The daily is going to remain pointed to the up on any upside above 16,846. Now, to be fair, this does mean that if it closes here today, it's going to get its initial cross back down. I'm still, looking at the Bollinger Band. As long as it's above 16,450, 16,500, and this low over here, that 16,550, then looking good to keep trying to the upside. If it does drop that area, that's where we're looking for those downside areas of interest. All right, let's look at SPY. SPY coming in at 475. Still no all-time high yet. I do think it's just running behind. Threatening to paint a technical high here, and it just did. Not painted a technical high. Post-market's trading around this wick low of the three candle high structure. It did close above the upper first, and it's trading right around it at 470.492, so basically 475. If it drops that area, we're looking locally. There is support at 470 to this low side structure around the basis at 467 to 468. Below there, then we're looking down to the lower first, which is coming right in a support zone at 460. As long as it's above 460, in my opinion, it's going to keep testing these highs and eventually take out this 480 high if it does not do it right from here. Now, I do think it is lagging in terms of an all-time high, and I do think it is going to hit it. 473. It did close above there, so the momentum pivot, still to the upside. It's probably going to be right on top of it as it's just been riding that upper first, just like Dow and NASDAQ. The weekly, it did not close above the upper second here, but it is, it's getting expansion right now, and its downside upper first, while still remaining very bullish, is above this high. And it's coming in at that 460 area. So we have confluence for the Bollinger Bands there in the 460 area to keep testing the upper second, which I do suspect is going to be around 480 or above in Monday's open. So new year probably going to open above the all-time high, thus giving us the bias that as long as it's closing above that upper first, the upper second is viable, and we're probably looking at an all-time high run as it's currently trying. And we'll see if it actually gets there. So, we went over the very long-term time frames for a lot of stuff on Wednesday, so we already got that out of the way. Let's go back here. Let's go to Bitcoin and look at it hanging out at 42K at the moment. Yeah, it's looking a little tired, looking a little bit like a little bit of downside, but to be quite honest, it is just, as it stands right now, it's just a consolidation until we see, that 40K breakdown. Could it step its way down to that area? Yes. Is there a trade to be had down there? Well, should have traded that lower high at 43.8. That was the trade in the lower term timeframes, by the way. It was a pretty easy one. momentum was showing a little bit of tiredness in that area. It went back for a retest even and gave people a chance here on the 12-hour. Sorry, I got to finish my coffee. My apologies to all of you. All right, let's go ahead and turn on. Let's go ahead and turn on the music real quick here. So I'm going to mute myself just for a moment while I turn on the music. All right, we're going to read the chat here just for a moment, see what you guys are talking about. Hopefully the music is not too loud. Let's see. All right. You need bonk looked at. Yeah, bonk took off, right? Let's see. Had that in mind. Sam says hi. Can I check on Stinky Linky? Sam, you're gonna have to explain. You're talking tech. Tet, isn't it Tet? Protect them. And I don't know what the other one is because I can't really see what that says. My eyesight sucks. Mint layer. Let's go with the first one that was requested here, and then we'll work our way down. Is ICP worth it or not? I mean, depends on if you're into Insane Clown Posse. If you're talking about ICP, the internet protocol there, internet computer protocol, it's pretty much a dead project from what I know, but I don't really keep up with it like that, so you'd have to evaluate that on your own. I can't tell you if anything is worth it or not, so that's not really. You got to rephrase your question. Like, are you looking to trade it? Is there worthwhile trades? Anything's tradable. Just a matter of what time frame. Are you looking to scalp or swing trade it? Or are you looking to hold it? What are you doing? Like, that's what you need to determine, Ivan. Let's see. So what do we get? Bonk. You want bonk? Anything? Anything. Anytime I see bonk, I just think of Bonkers, the cat. But that's just me. Yeah, I mean, nice drawdown to the lower first on the daily. It's not going to be something that I can actually get here. Let's go a couple decimal places out. We're going to have to go 8 decimal places out to even get a Stoke pivot on it. 1715, I'm not even going to count all the zeros, so just take this for what I'm reading off the chart. Above 1715, so there's 4 zeros in front of that. Price, there is also 4 zeros in front of, and it's at 14,953, so we can go one more here. More decimal point. So 17,148. It's currently trading at 14,565. So the momentum pivot's a little far away as it stands right now. It's got a little bit further. It could drop. I mean, we're looking at 10. We're looking at 10101 as a low possibility. That's also in and around the lower second standard deviation of the daily. Most of the moves so far on this have been picked up since it took off and broke this prolonged downtrend on the daily since last March of this year. Nice move up starting in October, and it is, to be fair, this is where you'd want to see it find support, is at the lower first on the daily. Nice volatile moves to the upside here. It is flirting with volatility expansion, but it's also getting compression of the Bollinger Bands. So basically, if this sets a low, and regains the basis band at that 178.550 area, which would be above the 171.47, it would likely, it's also where right below this consolidation before the breakdown, which is coming in at 188,318. So whatever that number is, if that was regained, then I'd be looking for this to substantially head up. And if we're talking percentages here, we're looking at if it sets a low, it's got to set a low here, get above that guy, that's 11%. And from there, if it regains that, we're looking towards this low side structure. It's about 16-17%, somewhere over here to that upper first, which is about 34% away. So big moves. It's even big moves down, by the way. So if it's from where it's trading, if it is going to head down further, it's about 25% drawdown, and all the way to the low, which to be fair would be the lower second. I wouldn't be looking too much further than the lower second as it stands right now, but that's around 32% on the drawdown from where it's currently trading now. Obviously, understand that this thing is traded up 35% since it put in the wick low yesterday. So context is everything. This is a an S coin that is moving in big ways on the daily and lower term time frames. So to be fair, whoever bought this top up here is in a lot of pain as it came down 64.5%. But in terms of support and resistance, it's holding this support area. Nice consolidation down here. It did dip into that area as well. So this bounce is to be expected. It's just a matter of, can it sustain this bounce? It did get compression to expansion to the downside on the 12-hour. 12-hour is turned up for momentum. So, basis is coming into that area of the daily that we were just talking about. This is at 176.118. That would be above the daily 171 pivot number. Probably looking at things headed up for a little while to go test some of this overhead resistance now. So that's bonk for you. So, all right, let's go ahead and we can look at Stinky Linky. Oh, Stinky Linky, what have you been up to? Let's see, what do we got here? Let's go to, yes, here's the last time we looked at it. It's still just consolidating. This has been a prolonged Link likes to do this. It legs up, nice consolidation. This is, preferable. Now I will say that if it starts to drop this zone at around, this this low at 1285, then we're probably looking at distribution, but there is a level that it could hold up at just below there in the $11 range to $12 range, and just kind of step it down. It would really start to look like distribution if it lost that, but it could be painting a distribution top if it dropped that 1285 low. But as it stands right now, that is not what we're seeing. We're seeing a nice consolidation. Yes, you start looking for distribution below this low here at 1363. That's not what I'm looking at. I'm seeing a lot of talk about Link distributing, and realistically, it's just consolidating, most likely for the next leg up, to be quite honest. In this case, if it does take out that green line there at $18, we're looking at 1955 fairly quickly. But in terms of my bias as to where things are going to go, that's going to be based on kind of where it's trading in terms of the bands. If it does lose the basis band here, which it is painting a high, and momentum is shifting on the daily after this run from the lower second to upper second. If it does lose the basis here around $15, $15.10, I would be looking right back to this swing low wick at around the lower first at $14.36. If it drops that, we're looking at a lower second and the wick lows here in the mid $13,000 region. Below there, we're looking for this close open over here at somewhere around to 1330, and that would open up that wick low. So that would be around that 1285 wick low. Below there, you're looking into the mid to low $12 region, so around 1225 to 1250. Below there, you're looking for the $11 to $12 region. So on the highs, around 12. On the low side, there is wicks below $11, but we're looking at the support there being, the upper $10 to $11 region, and then you don't want to see any of this order block area right here where the wick low is coming in around 1051 dropped. Longer term, you can see this on the weekly as well. You don't want the basis band dropped. Now, why did I know that the basis band was there? Because I've been looking at Bollinger Bands forever, and the last time we looked at this, the basis band was right above these highs here and headed towards that $11 region. So you don't want the weekly basis band dropped. Otherwise, it's going to distribute down to probably $8, right? Other than that, this is a weekly consolidation. As long as it's remaining above the basis band on the weekly, doesn't drop that $11 region, we're looking at, maybe a daily distribution down into that area. I would be looking for bounces. Locally, just keep an eye on that, 1285 to 1330 box here. And as long as it's closing above the upper first on the weekly at 1550, we're looking at that 18 to $20 basically to the upside on the weekly here. And then, above there, probably a lot more, but you want to see it consolidate for a little while. This was aggressive expansion on the weekly. It's cooling down. 1592 is going to be the momentum pivot on the weekly, but the monthly is where it's at, and the upper second standard deviation is right there in that 1322 to 1330 area, which is the top side of the box that we just drew. So you want to see it close above there on the monthly to start getting really aggressive upside expansion. Thus, we're looking for this to aggressively head up over time, especially if on the weekly it can close here or higher, because it'll be taking out this weekly close open structure. And then we're looking to right there at around 1955 to $20 from the weekly perspective. So looks good. I like the consolidation as it stands right now, until we saw expansion down below the lower second, which of course would be right into this zone of interest. Only unless it expanded below there would I be looking for further downside. But the flip side of that is we want to see closures that get expansion above the upper second for price to go and test the $18 to $20 region, and the upper second is currently at 1660. And you're gonna have to let me know if TET is the right one for Tectum. Yes, everyone is getting into this, so I see that you're on the TET train. With, I guess, MEXC is the only real place. Yeah, this is a big move for TET. This is, a breakout from the July 23 area. There's got to be a longer term chart. This has been around longer, I thought. You have to let me know what exchange, if we can't find anything. We could try. I thought it was been around since before August. Maybe it was just because it was on swaps. Could have been because it was being swapped. Now, apparently July is the earliest we got here. Look, I don't suggest you trade on MEXC, but to each their own. If you are, this is a legit breakout on the daily and higher time frames with a back test at 1775. So, BBWP is way up there, but it's not yet. The moving average is still chasing. Momentum is pointed to the upside. If you're looking at, the break, it's already above the 2414, but if it gets above there on a consolidation to expansion, we could take hit the 2414, I believe, from this consolidation. Yeah, so it poked literally right at the 2414. So if we fib this, basically I'm just fibbing the high of the consolidation to the low of the consolidation here on a wick. It's already completed its 2, 4, and 4 run. It's hanging out above the 1618, which makes the highs available. So, this is probably going to get continuation for the foreseeable future as long as it's remaining above the breakout area at 1382. So that's what I'd be paying attention to. When looking at the weekly, there's not too much to make other than the weekly is looking like a fresh breakout, thus continuation. You can maybe draw some conclusions from this guy here. The weekly's right on a 1272. It spiked the 1414. Next big area would be like $36 to around 46 to $50 to the upside, as long as it's closing above basically where the area we just talked about, $13.82 to $14. Then the breakout's real. It's probably going to keep heading up. If it does lose the 1382 prior high, then it's probably going to go back in and consolidate. Probably likely to find it around 10, $11. It's Tectum. I don't know. It's a shit coin. It's taken off. I mean, it had a big drawdown after listing and then just really worked its way back to life there. So I don't know too much about it other than everyone was talking about it on the downside move, which likely meant that we've got some accumulation going on. Need to pump it to get our money's worth, right? So, and not quite sure what mint layer is. Sam, what is mint layer? I want a full breakdown of the white paper, please. I'm just kidding. Bro, if you are trading on MEXC, please be careful. They B-book like crazy. That's why they kept contacting me for to have me do be a partner with them, and I said no because they B-book the shit out of their books. Means they're the other side of the liquidity. They're who you're trading against. They're taking the other side of your trade. See, that's why they've wiped on lower liquidity coins. They wipe people out, or if you're winning too much, they wipe you out. Wipe your account out, not even your trade. I can't fight an uptrend. Looks good so far on the daily. Same kind of thing. Downtrend, massive uptrend. We are looking at momentum pivot at 31 cents, 31.5 cents. This is a compression. So we had an expansion to compression down by the lower first, and now it's just bouncing in between the two. So this is pretty easy. If it does close back above the upper second, which is going to be this closing highs up here at 52.5 cents or so, we're looking for this to run back to the highs at 66 cents. If it does start to lose the basis, which, to be fair, there's quite a few daily closes in here, opens and closes, that it's, tested around in yesterday's candle. If it does head down there further, I would say around 38 to 35 cents. 35 cents on the opens down here, close open. I'd be looking for it below there, it'd be below the lower first. I'd be looking for it to run the lows again somewhere around the lower second at 38 cents, maybe even 28. If it loses that, you're looking for a bigger drawdown to around 20 cents. But if it can hold around 28 to 30 cents, then I'd be looking for this to generally trade sideways and up. If it does get above 52 cents, we're looking for that 66 cents and beyond. If you want to take the consolidation move up, there's a bunch of different fibs you could pull on this, but I do want to take this little pullback. It just settled in right on the 618 here. It did reject the 888 on the fib. If it can regain 46 cents, that would be the upper first, and the 786, I'd be looking for it to head back to the highs again. 55 to 65 cents or so. As long as it can get above that upper second at that 50-cent region. Yeah, that's basically what I'd be looking for. Now for the local structure, yeah, it's above the 50% read. Above the, let's go just take the local move. So the move off the low here, 1272 is the spike. I'd be looking at 72 to 75 cents, possibly 83. That's where we just pulled a bunch of fibs in a lot of the 618 area. A lot of the major fibs are coming in around 83 to 86 cents. So above 66 cents, probably looking at 83 to 86. After that, I would be probably looking for it to trade to a buck or something. So have a good one, Don. Thanks for hanging out, buddy. Have a great new year. Yeah, so you have to let me know if that helps, Mr. Sam. I have time to look to BCH. Let's look at BCH. It's kind of bizarre that so many people still trade this. I mean, there's setups to be had. I just find it kind of funny that it's still being traded. Oh boy. Oh boy. It's a long form consolidation. What a goofy ass looking chart. It's actually not that bad, but this race off the lows from June, what a leg up, man. That's crazy. Anyway, let's look at the inside bars. These are all going to be inside bars on longer term time frames. So it's trading above the 618 right now. It is threatening. If it drops down, we're looking to the basis at around 234, 235 area on the daily. If it does start to lose the 253 and more importantly 247 upper first on the daily, that is the next big area I would be looking for, is around 234, 235 by the 50% fib of the inside bars on something like the weekly, by the way. That's what I'm looking at in this. This is actually technically not an inside bar. It's tracking the pullback here. So it's not inside bars, but it is the pullback to consolidation. So while it's consolidating here, as long as it's strong above the 50% and especially above the 618 here, it's probably in for some more consolidation. You can see how this is chopped sideways and up, higher highs, came down for a little bit of a lower high to higher high reset. I suspect it did just get some expansion to the upside off the lower first. I do like that. It is pointed up on any closes above 243. It's currently trading $11 above there on the daily. So yes, it is a pullback. As long as it's above the upper first here at 247 to that 618 to 53, that's kind of the area I'd pay attention to in the lower term time frames. But oh, hey Roca, take care, buddy. Thanks for hanging out. I didn't realize you were here, but thank you for hanging out, bud. Yeah, so as long as it's above there, it's probably going to test the highs and higher. I would be aware of bearish divergence. I do suspect that has been building. Maybe this is maybe the new trend reset it off of the most recent lows. It did. But there is a little bit of bearish divergence. It hasn't quite populated. We did make higher highs than this guy back here and lower highs on RSI. So you're getting bullish divergence to bearish divergence, probably range bound for now until it breaks out back above that area. We're looking at getting back above 260, then we're looking for it to run somewhere around 280 to 285. I hope that helps. Does that help, Cheryl? You'll have to let me know if you have any other questions. We can look at the weekly too, I guess. Weekly, legit breakout, legit higher low structure off of there. Finding resistance around this area here. Let's get rid of the fibs. So it's finding resistance around the 260 region obviously big major low before a distribution. So it's basically 260 to 395. It's a massive area of interest. So I just take it, in the lower term time frames, take it one step at a time, provided it can maintain this area or get into it. You can see where it wicked into on the highs here at the 279, 280 wick high on the weekly. It's trading above the basis. I like that. If it does drop it, obviously, and drop 213, then we're looking at the lower first at 200 to 205 or so, where this little order block candle's coming in over here. And then possibly a run to the lower second where this low's coming in at 185 area. But, just like what we talked about just a moment ago, to the upside, if it does start breaking through 260, we're looking at 280 at that wick high. Above there, we can see that this swung up to around 330. But the real area to watch is this high, where this weekly order block is coming in over here from the structural breakdown back in 2021 to the distribution. So this or redistribution, I should say, because it was distribution to redistribution. So in this case, we're looking at kind of this high mixed with this order block, and it's really the order block, because you could see the order block and the wick high at that $393 to $400 area is really what you're going to be watching for. And I do think above 280, especially if it starts to get expansion above 263, 280, it's going to be the next big area. Above there, you're probably looking at $300 to $400 pretty quickly. I'm not calling for like massive up candles, but you could start seeing some more substantial upside candles, and that's all predicated on it closing above 213 on the weekly. So, and the weekly is looking to turn back up on any close this weekend above 246. So that is something to watch. I would look for a momentum shift. And if we do see it closing above there in the upper first, I just noticed this as well. You'll have a low set here. So you want to see it closing above this close right here at 251. It's right there. You want to see 251 closed above. You want to see 246 closed above. So if it's closing above 251, it's going to put in a low. Yes, you can take this wick high in the upper first at 243, which, oh hey, 246 is the momentum pivot. So above the upper first, probably looking at a momentum shift coming into the week after the end of the first week of January. If not, you're looking for the low to be set. Low set, bullish divergence populating. This is a hidden bull div. And we're probably looking for the bullish control zone to get tagged. Bullish control zone is going to be at 265. So, right in the areas that we talked about to the upside here. That would be the upper second, which was already tagged this week. We'd be looking right back there and higher. Sol is probably going to keep running like what we had discussed. Once it broke out, we were looking at $100 and above the last we talked. And I would expect Sol to consolidate around there for a little bit longer, by the way. And, we'll evaluate next year. I don't think it's worth getting into right now, but, we're looking at, nice consolidation. It's above the upper second. Yeah, we were looking at, the breakout above 80. We were looking at, between 93 and $115. It spiked above it into our next big zone of interest. But I would be looking for, if it can remain above like $93, I'd be looking for this to leg up to about, 143 to 150, those big areas to the upside there. So to kind of revisit, that zone that we had been talking about, once it gets through, it's boom, it's going to be like it's shot out of a cannon. It doesn't seem like much on a log scale chart, but, going from 80 to $100 is a 20% move. Big move, more than a 20% move. That was within 2 days. Boom, boom. And then just continuation. Once we close above that 93.31, next target in play at 115. Now, it was getting a little exhausted up here, so I was careful in this area. I actually took some profits on my trades, but I've been holding Sol since we've been talking about it way back in the $19 to $20 range in terms of my trades. So I was in a swing long position for a very, very long time, and I decided to take some profits off of that. And I've been holding Sol since the early days of Sol in cold storage. So I don't know if I'll get rid of that until I see like a full-on bull cycle for Bitcoin and altcoins, and then I'll evaluate whether or not I'm gonna get rid of that. I got rid of a substantial amount of it last bull market, but I reaccumulated some more this past bear market. Yeah, I mean, I think you and I have spoken about this before, but I've been trading Sol basically since it got released by them in 2021. And then I held a lot. This is not this is Coinbase's chart, but it was in 2020 into 2021. When did it launch? Let's just go Sol USD. I basically since the beginning 2020. So I was like back here, like in this area, and because it was when Bitcoin was breaking out, the Elon Musk stuff had come out, and we were getting that drawdown into the lows, and then the Elon Musk news came out, catapulted things in that December into January of 2021. That was not a news-driven event, but I've been basically in Sol since around this time period, because I didn't catch the initial up move. I caught the down move, and then big upside move, and then I traded the highs myself, and then I reaccumulated on our lows here as we were talking about it. We've been talking about it since oh gosh, I don't know, Cheryl, you ask about it the most, but we've been aware and been trading it for a lot longer as well, for those that have been here for a while. But you've been asking about it since you joined, regularly checking in on it. I accumulated some here as well, so I'm looking for big moves on Sol over time, massive consolidation, and a lot more to come, especially when looking at the monthly. It's substantially above the upper second standard deviation, just so you know. And the monthly is, it's tough to take pivots on the monthly, so you can go to like the 2 week, and you can just see, like, I'm looking for massive moves. Yeah, I mean, it's already testing its 2 week lower high to distribution and reaccumulation. Yeah, it's testing the lows of the highs. It's ready, I think, for a substantial move soon. Do I have any? No, I haven't. I don't have any hidden anything that I bought. I don't have any secret sauce. I mean, if I'm into a coin, if I'm charting it, if there's a crypto, I've probably bought some of it at spot, because I like to try a little bit of everything. I pick up a little bit of everything spot. Some things just go to zero, and that's fine. I'm not, my allocation for just throwaway money in the altcoin market is probably 5% of my portfolio, which is quite a bit more than most, by the way, just so you know. That's actually really aggressive. But I can afford to do it, so I throw a lot at newer stuff. AI has done very well. I mean, so that did very well for quite a while, and really pumped that portion of my, I don't care if this is ever lost forever. So there's a lot more hits than misses there, and some of them really knock it out of the park. And then there's blue chips. I like, my real okay, Roka knows what's up. He knows I'm actually not a boomer, but I do like the boomer coin, Litecoin. I like Litecoin not because of its chart, by the way. I like it because of its actual use case. and I make money on it even when I'm transferring it around. So that is one of the ones that I enjoy using, which also means that I hold a lot of it, and I also participate in the Litecoin network, and I also mine the Litecoin network and Dogecoin, and I mine Bitcoin, and so I hold a lot of Litecoin, I hold a lot of Doge, I hold a lot of derivatives on those chains as well because of mining and the mining pool rewards. But I also I mine Bitcoin myself as well. Roka knows this, but I have miners in a co-location that I own, and then I also mine at my home here. Yep. Jimmy, you want to? Jimmy's over here. Excuse my language. He's having a bit of a dick measuring contest over here when it comes to who owns the most co-located miners. Look, unless you're mining it on site, which is difficult to do. It's not worth dick measuring there, buddy, because it is a co-location. Yes, we own the miners, but yeah. Oh, I'm not offended, my friend. Still hurting from Luna. Man, Roka and a bunch of the other longer term people here will tell you we shorted the exact, or I at least shorted the exact, I don't know how many others took the call on that, but I shorted the exact top of Luna to the point where it was getting down into the single digits and I couldn't find exit liquidity. Like I literally shorted the exact top. We called the exact top on Luna. And there was a portion of my position, I had to take profits like way above because of slippage just to get out, because there was no liquidity. There was no liquidity to exit the damn position. So I was like, I'm making so much fucking money on this. Like, it literally was probably the best trade of my life. I think that's still up there as it's got to be among like the best trades of my life in terms of the amount made in a single trade. And the fact that I think we called it like to the penny. And we call, as you can tell, Cheryl, you've been around a while. We call a lot of these pretty much right to the dollar, if not, the penny in some cases. But Luna was like dead on. And I forget exactly the circumstances for why it was a momentum based thing and also a volatility based thing. But at the time, there was something else that made me. I'm not going to tell you that, Ivan. I don't. Look, man, the people who flaunt numbers, whether that's trade sizes or that kind of stuff, I don't like that, because in some cases, I'm going to give you numbers that you might not be able to obtain until you grow your accounts. But so I don't think it's worth me sharing numbers, and I don't share numbers. I might share a percentage, like, hey, like on the Luna trade, thousands and thousands and thousands and thousands of percent gain. Let's put it that way, off of the swing position. And it was a swing position. I didn't just take a scalp. I had been preparing for it. Like, it hit the exact area. We'd been talking about it for a couple of weeks, and then I was well prepared for it. And I had been trading it on the way up the entire time too. So it was like, this thing's going to bomb. Now, I had no idea that it was going to die. But it was actually, I'll be honest with you, like, it was a little scary thinking that I couldn't get rid of I had already taken a lot of profit, but I wanted that last bit of profit. And I was afraid I wasn't going to be able to exit. But luckily, people were like, hey, we got to throw all our money into this thing because it's definitely going to come back. So they just kept providing liquidity, and I was able to exit. Slippage was crazy, though. Like, and for those of you that are trading with size, you understand what slippage is. For those of you that are not trading with size, substantial size, we're talking large numbers. you're probably not experiencing slippage, and you're probably getting pretty good fills. But there was, even at the time, even lower amounts were getting terrible amounts of slippage because of just the books getting ripped through. Cheryl, you're doing it the right way. Just grow your account. It becomes, it just compounds over time, little by little. I mean, there was a little while where I was showing guys just, you know, you can trade with $1,000 on 3x leverage and you can grow your account to 10 grand in no time. So $1,000 on 3x leverage is 3 grand, right? It's low leverage. Pick your trades right. You can grow your actual underlying account size to like 10 grand in no time. So it's like, you just take that down. Like, okay, well, what if it's $500 on 3x leverage? And you got $1,500. You can grow your account to $5,000 in no time. It's not that difficult, but you do need to be practiced. You do need to have patience, and more importantly, you gotta have mental toughness, and that comes with time in the market. And the psychology of it is, you know, understanding that you take profits when you have profits. You don't run yourself into a massive loss. You know, it's really, you know, a lot of people treat scalp trades as swing trades, and swing trades as scalp trades. And it's about understanding what your plan is, what your goals are, taking profit. If things keep running, don't worry about it. You come back to it when things get to a level of interest, and you either trade it back down if it went up, or you trade the bounce after it mean reverts, or whatever it might be, and you can grow your account over time. And before you know it, you are trading with bigger amounts. And the other thing is, make sure to pay yourself. Always make sure to pay yourself. Don't take that for granted. Roka says, yeah, I made almost $5,000 in the Luna long bounce. Yeah, I remember some of that off of the lows they kept, we're talking like when it was trading down like in the pennies. Yeah, you made, yeah. I just stopped because I had already made my money on the way up for Luna, and then that Pico top to basically the bottom. I mean, I still feel a bit lucky that there was enough liquidity to get out of that position at the bottom, which is basically zero. I was afraid that position was going to end up this massive percentage gain that never came to fruition, but people kept going in and kept freaking throwing money at that thing. Like, it's going to make it, man. Like, okay, thank you for filling me. Thank you. You're letting me get out of my position from the Pico top, man. This is literally the all-time high, and I shorted all the way down. That was still one of my favorite moments, and for those of you that were here, you got to experience some of that with me. And some even traded it with me, but exited far earlier than I did, yeah. Yeah. Look, part of that was we were prepared for it. I didn't know it was going to be the Pico top forever, but I was looking for a very large drawdown, and that's what happened. If you were to, Ivan, I don't understand your question, but I don't trade anything that I'm, you know, if I'm not just, it's got to be something I'm charting and something I'm interested in the setup for. I don't just because it is a meme coin, or there's no difference between a meme coin and a real coin. I mean, you might be looking at larger cap coins, you know, what they are considered blue chips. I mean, it's all about the chart. It's all about the chart. What is the setup? I mean, look at the Solana setup. It was freaking bonkers easy to call. Either it was going to break down below this low and get expansion to the downside because of this compression over here, right? That was a close at 1543 with a low of 1325. So if it broke down below that, it would have been expansion at least to the next level at 10 to, $8 to $10, right? And possibly beyond on the 2-week rather. Or it was going to take out this high at $30. And once it took out the high at $30, it got expansion on the 2-week, and that was the trade. Easy. Just, you could take profit at each level. I mean, 2 weeks, you take profit there at $50, and then you take profit at the next level, which is literally this low over here. And that was at, $70 to $80. And then you could take profit in our range that we were just talking about. 93 to 115, 115 to 150, so on and so forth. Or you just trade it level to level. You trade the expansion. I mean, that was the setup. That was a beautiful setup coming from August into September. And, there's nothing, there was nothing. I mean, the criteria was clear. It's if it breaks out and starts closing above $30, that's the trade. If it starts to break down from that, level that we just talked about, that low side structure at like $15 to $13, then we're trading it to, $8 to $10, maybe even lower. But it was a lot less likely that it was going to trade down, as we noted during this entire move up. I mean, the daily was a downtrend break over here, higher low, boom. That also gave you, a $20 entry, which is basically where I traded from. For my current long position was around the $20 region, low 20s. It was somewhere in this confirmed higher low, so it might have been like 22 or something. I was waiting for a higher low to come in on the daily. After the trend break, downtrend break was this guy here, and then higher low, boom. Well, it's actually equal lows, but it was a little bit of a higher low and a close. Hit that upper second, mean revert. Put in a compression while putting in a low. So that was it. Yeah, Cheryl says, yeah, I saw Luna. People kept going in. Long. Yeah, a lot of longs kept coming in. So Cheryl says, I have to learn how to leverage trade. So are you just trading spot? Trading spot is fine. You don't necessarily need to leverage trade. You can trade spot and make plenty of money. Now the difference is it's depending on your platform, it's difficult to short spot without derivatives. There are some that allow you to do it or hedge your spot positions, which is a short. In that case, I believe Binance allows it, and a few others allow it, but in most cases, you're unable to short unless you have like an actual trading account, which of course is in a way going to be a derivative anyway. If you're going to short, it's going to be a derivative. I mean, you can trade on Coinbase if you want to pay for their trading side of things. I mean, you can just trade spot on Coinbase, or you can pay for their trading platform side. Yeah, Binance US is dead and not allowed to be here as far as I remember. Or did they become compliant again? That much I don't know. What I will tell you is, once ETFs get approved, it's going to be, if you want to long and short, you could do that through traditional markets. But the options markets are where you can really set up some cool strategies to protect yourself, protect any kind of accumulation you've done, and or bracket ranges and range trade, and have your options positions do it. It's really low impact and really gives you time to evaluate as well. And you can set everything up to automatically sell in the different areas and buy in the different areas as well on most brokerage platforms. So Roka says, still gotta laugh every time he sees Mike Novogratz. He got that Luna tattoo. Yeah, did he get it covered up? That guy. Forget. And that was so funny with the Luna tattoo. Just gonna have to turn it into a Halloween theme or something and try to cover it. I mean, you know as much about when ETFs are getting approved as I do if you read in the news. I mean, everyone's expecting, what is it, January 10th? Is that, viable? Don't know, don't care. They're in talks. They're working out the details of the ETFs, and they're going to get approved when they get approved. I expect them to be in early 2024. Does it really matter? No, not really. When it happens, we'll know. And we're going to be talking a lot about options and how to read them, what they are first, and then how to read them. So, yeah, it's the 10th. Bloomberg Terminal has it, and then there's James Seifert, who is a Bloomberg guy, analyst. There's a bunch of, I think that's how you say his name. I'm probably butchering it. My apologies. There's a bunch of guys on X, if you want to use X, or there's always a news site willing to tell you when ETFs are estimated. They just usually are quoting the guys off of X who are industry guys. And then that's usually when the articles start popping up. Yeah, same here. I'm also going to head out here as we're just kind of chilling and talking. I do appreciate everyone hanging out today. I hope that everyone has a wonderful new year. Please keep an eye on the YouTube channel here, as I will upload a Bitcoin in 60 seconds video probably tomorrow night. I want to see how things start coming into close on New Year's. And of course, I'm not going to have one on New Year's. Well, we're going to talk again on Monday. So probably tomorrow night, see where Bitcoin is. I'll have a 60-second update video, shorts video here on YouTube. And then I will also share that on X, formerly Twitter, where you can find me at CryptoLandy. So yeah, I really hope you all stay safe. Have a wonderful new year. Have a wonderful weekend. Have a wonderful morning, afternoon, and evening, no matter where you're in the world. Please trade safe. And of course, as always, stay safe. And I do want to thank you all for hanging out with me this past year. It has been fun growing this channel from basically, just a private channel with some friends that I would just stream to, and then opening it up. And, we hit a couple milestones for the channel here, over 500 subscribers, and a lot of new regulars that do jump in and out. Not many that like to talk, but hopefully that will change a bit and get some more people that want to chat in here. I know that some of them have contacted me in other ways to let me know that they enjoy the content. And for those that don't like chatting, I want to thank you as well. But come chat, come hang out with us. Want to start building this out a little bit more. We'll have some more plans for the channel in general next year. And of course, we're going to be doing a lot of talking about the markets all year next year. And I am stalling so that I can set up my outro stuff here. But you all take care of yourselves. Enjoy the holidays. Again, thank you so much for hanging out with me. With all of that being said, Landy out. Enjoy the tunes for a little bit here.
has announced that a flying disc has been found and is now in the possession of the Army.